Hi friends, welcome back to the channel. So, question for you. Are you planning to buy Apple's new headset? They're calling this thing the Vision Pro. Price tag comes in at $3,500. And is Apple going to be able to sell enough of these things to justify all the R&D they put into it? I'm opening with this because I feel like this represents everything that's going on in the market. Basically, you have these big tech companies that are looking for growth somewhere. And the question that I have is like, is there going to be enough people out there who are both willing, right? They want to buy this thing, and able, meaning they have enough money to actually buy this thing. My personal opinion on this thing is I think the market category for this kind of device is going to be really small. You could make the case that maybe some business users are going to be using it, but I was looking at this headline here. This is kind of a funny one. It says, Zoom meetings are about to get weirder thanks to Vision Pro. I mean, yes, we do use Zoom and we do video chats quite a bit, but the thing is, like, when you put this thing on, I guess it's going to create like a digital, avatar version of yourself. And, seriously, I don't know how many people are going to take a meeting like this, like an important meeting, when you're just talking through like a digital character. So I mean, I guess theoretically the avatar looks good, but I don't think it's going to look as good as, you talking to another person. And I'd be curious if anyone out there is going to try that, to where, you put on your digital avatar for a job interview. I mean, like, is anyone going to take that seriously? And again, the question I have for you is anyone going to buy this thing? One of the things that I think is interesting too is that some of the big apps are not going to be available for it. So I believe it was like a Netflix and a YouTube are not making apps exclusively for this thing, because they're saying, hey, you can use it through the browser. But usually for these kind of devices, having an app that's made specifically for this works a lot better. Now, when I posed this question to you, I was saying, are you willing and able to buy something like this? This comes at a time when this is the headlines coming out of China. Evergrande is liquidating their assets. Well, it's a complicated thing. So the Hong Kong courts ruled that they need to start liquidating, opposed to restructuring debt. However, the mainland still needs to make a determination on that. Now, the big question with this stuff is what happens with foreign investors who have money in Evergrande. And if you don't know about the Evergrande situation, basically they were the big real estate developer in China. It was all a bubble. You got a bunch of unfinished houses. And moreover, you have a bunch of people who all want their money back, which is understandably so. The chart in this picture, as you can see, is the Evergrande debt keeps going up and up and up and up. And a lot of these people are like, give me my money, give me my money, give me my money. And so going back to the first question is, are you going to be buying a Vision headset? Now, generally speaking, in the past, when Apple used to put out new products, these kind of things could go for top dollar or yuan in China. But I mean, with this kind of stuff happening, who knows? Moreover, this is another related headline, and I like to show you guys everything and connect the dots for you. BYD missed their earnings estimates. So if you don't know BYD, this was and I believe it stands for Beyond Your Dreams. You guys can correct me if I'm wrong there, but this was actually a Warren Buffett-backed car company who overtook Tesla in China, and they're making EVs and hybrids and those kind of things, but evidently they're not even making as much money as people had expected. So point being, right, where's this money going to come from to buy the Apple Vision Pro? And moreover, this is an interesting one as well. Tesla board chair and topmost deputy, as the headlines, set up plans to sell stock. So this is Robin Denholm and Andrew Baglino. I always tell you guys the same thing. Don't necessarily listen to what people say. Look at what people do. So some of the people at Tesla are selling. Now, all indications, in my opinion, we've had a major run up with tech companies. They're going to be reporting their earnings this week. We just had Tesla's. It was a big disappointment. For me, it feels like the top. That's just my opinion on this. I was looking at this chart here. I mean, you guys can look at it for yourself. This is coming in from FactSet Research and Yahoo Finance. It says 6 companies expected to lead S&P 500 earnings. And basically, it's Amazon, Apple, Google, Meta, Microsoft, and NVIDIA. You can take a look at this chart. So basically, this is sort of like predicting their earnings growth and their earnings. And all of it is of the market is coming from these few companies, whereas the rest of the S&P 500 is actually declining in earnings. And when you actually dig into the numbers, this is what's crazy. So I'll just read it for you guys. It says here, the expectations for some names are massive. NVIDIA is expected to grow earnings per share by more than 400% compared to the same period the prior year. So, I mean, is it possible? Yes, but this for a company like Nvidia, this seems for me it seems ludicrous that we're expecting this much growth. I personally think the AI stuff is a whole bunch of hype, but again, that's just me. Markets be crazy, and they can be irrational longer than you can be solvent. That's always the joke on this kind of stuff. We're also, I guess, expecting Meta to grow 175% compared to last year. And then they're saying here, a second chart is saying Amazon, Alphabet, Meta, Nvidia are expected to grow earnings by nearly 80% in the first quarter of 2024. So I think that's looking forward. And what's crazy is if you look at the PE ratios of these companies. So this is Google, Apple, Meta, Nvidia, Amazon, and Microsoft. I was looking this stuff up for myself. They're all really high. This is, if you don't understand it, you usually want to think of PEs of like, okay, compare it to growth. So then we look at the PEG, which is PE compared to growth. And you generally want something that is under 1, right? And so you have ratios here, and I'll just give you an example here. Apple's like, and this is forward, and forward is predictions, but like a PEG of 3, which is kind of nuts. And that's non-GAAP. If you want to look at GAAP, it's 95. I'm just comparing non-GAAP because they're a little bit more easier to compare among all of these. Microsoft's at 2.45. And again, I was telling you guys, you want something that's generally under 1, and nothing's really there. So it's hard for me to justify these valuations of these tech companies. I'd be curious your guys' thoughts on these things. Now, it's not a hit on these companies. So I'm not saying that Apple's a bad company. I'm not saying that. I actually like Apple. I have many Apple products in our house, multiple computers, multiple phones. But it doesn't necessarily mean that I want to pay just any price for the stock, meaning ownership of the company, if I don't feel like their earnings growth is there. This is why I posed a question to you in the beginning is, can they sell $3,500 headsets? The same way is like the question, and it's something you have to ask yourself as an investor. Do you think Nvidia is going to, multiply their earnings compared to last year by 400%? Maybe. I mean, maybe. But again, to me, it feels like a lot of hype. Regarding hype, there's an interesting story that came out recently, and this was the iRobot thing. So this is an interesting one because Amazon wanted to buy it, but it looks like it's going to get blocked. Full disclosure, when we lived in USA, I had an iRobot. It works pretty good. But we actually have a similar one here in Korea. It's not iRobot. It's a different brand. What brand is our robot? I don't remember what brand it is, to be really honest. We just got the one that looked cool and it was on sale, basically. But the point I'm trying to make with this is that for these kind of tech companies to constantly be pushing forward and making more money, they have to come up with new things. And so yes, we are going to all buy robots one day in terms of vacuums, because I'll just be very frank, I think the robot vacuum is really, really cool, and we literally vacuum every day and we don't have to do anything. You just push the button. And the problem is that for these kind of things is that there's going to be a lot of competition coming in. Like, what makes your robot stand out? Moreover, prices also get driven down the more competition enters into the market. So this is something like, say, the BYD. This is basic business, right? If you have a couple competitors, and if the consumer perceives them to be equal quality, they're going to go with the one that's priced less, right? And so then people try to start undercutting each other. The Apple one's an interesting one because they always try to make the case that, well, we don't necessarily need to cut our prices because our quality is so much better than everyone else. But like, who's going to be paying $3,500 for this thing? So we have that coming up this week. We also have, I think there's going to be a Fed meeting. I want to say it's Wednesday. Usually these things are 2-day meetings. I don't think they're going to do anything. They're not going to raise. They're not going to cut. They're just going to be talking about, inflation. We're watching the data. It's always the same stuff. My personal opinion on this stuff is that they should just hold rates steady throughout most of the year. Yes, Wall Street's going to keep asking for lower rates. They're going to be asking for printing of more money. They're always asked that. And there's going to be a lot of expectations with that. Regards to inflation, I don't want to make any jokes or make anything light of this. Unfortunately, we had a couple soldiers die in the Middle East. I've said to you guys so many times, I just don't want to be involved with this stuff. This is the headlines coming out of that. U.S. not looking for war with Iran, and that's coming from the White House. Why are we talking about Iran? Well, the attacks seem to be Iran backed, so I wouldn't dispute that. The Republican side, they're saying, hey, we should hit Iran and strike back. And I just, and this is a quote from Lindsey Graham, this is a Republican senator, hit Iran now, hit them hard. And the problem I have with this is like, what do you expect is going to happen? Like, what do you expect? So one is when you send your troops over to the Middle East, and I think we sent like a couple carrier groups, and then the Brits sent a carrier group as well. And then we just hang out there, and now we have oil takers on fire, right? You guys can see this. I understand, right? The basic gist of it is, well, we need to protect the shipping lanes and protect commerce, these kind of things. But I'm just saying, what do you think is going to happen now that we're under attack and we've had troops killed? If we attack Iran, what do you think is going to happen? And so I don't want to dwell too much on this stuff, but I just want to say that if you're just looking at the markets alone and not necessarily talking about the moral implications or political implications of going to war with Iran, this could certainly be something that could have a problem or create problems with the supply chain. So do keep an eye on that. This is what's going on in the markets. There was another story which I want to mention as well. I mentioned this last time, and it's kind of funny because I think that Walmart must be paying Bloomberg or the Wall Street Journal, right? Basically the major media outlets to give them press. But I mean, it catches my eye. That's why I'm bringing it up. I mean, look at this. Walmart store managers can make up to $400,000 with stock grants. So before, the last headline we read was like that, they were raising their salaries and also raising their bonuses. But I didn't realize like their bonuses and then plus their stock options and such can be worth this much. So before we talked about how, and we talked about in the comments where Walmart store manager job is not that great. But if you charge this much money, maybe these are the people who are going to do it. Now, I was reading, which I thought was really interesting, is that, and we're talking about money, meaning that Walmart managers are the ones who are going to be buying the Vision Pros. But I was reading something really interesting is that they were saying many of the managers actually start as hourly employees. It said here, about 75% of the Walmart's managers start as hourly employees. I thought that was really interesting. And then it takes you about 5 years to get to be the manager role. So, hey, I think, and I think there are other companies out there like this. But yeah, if you, and this is for real for these type of companies, you don't necessarily even have to have a college degree. And if you know the business, well, and you stick with it, you can work your way up to the top. So in that regards, for some people, this is not a bad way to go. I mentioned before, though, I think the job as a whole is probably a massive amount of stress. But when they're paying you this amount of money, hey, you can do it for a couple of years. You'll be fine. So anyway, I hope you guys are all doing well out there. I'd love to hear your thoughts on these kind of things. I shared my opinion, and I'd like to get yours as well. So thanks again for watching, and I'll catch you next video.